JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 25th of June 2020, so yep, welcome everyone. Welcome to this Thursday's morning session where we're going to have a quick look at the markets, a few of the charts that we looked at yesterday. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation. It should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then, quick update on what's happening here globally. So as you can see, the figures continue to rise. The map is updating slowly, but yep, of course the whole situation is not really looking good. Still, we do have the same leaderboard, the same kind of positions here on the first three places in terms of total infections are taken by US, Brazil, and Russia in that order. But in terms of total deaths, yes, of course, US is leading the way in that, and then it's Brazil, and then in third place it's United Kingdom. So still, yep, the situation is not very well in there. Now then, jumping into the charts, and by the way, actually before I jump into the charts, guys, today we have quite a busy calendar, or a relatively busy calendar, I would say, because we do have a bit of data coming out, which I suggest to kind of keep an eye on. Of course, the main data is coming out from the US. We do have the US GDP figures for Q1 coming out, but of course the more important one will be the initial jobless claims together with the continuing jobless claims figures. So yep, we'll keep an eye on that one. But again, for now, the initial jobless claims are expected to come out lower than the previous number. So the previous number was sitting somewhere at around 1.5 million. Now the forecast is 1.3 million. So yep, let's see how all that is gonna play out. Yep, of course, like I said, we'll keep an eye on the continuing jobless claims as well. Now then, jumping into the charts, and the first one I want to touch on here is the Nikkei. Quick update here. I talked about this index yesterday. You can see that this morning it kind of opened with the gap to the downside, and it basically drifted lower. It is currently, well, it ended the day in the red, and ended the day bang on this upside support line taken from the low the 3rd of April. So in a way, first of all, let's get rid of this line. We no longer need it. And now we're going to keep an eye on this upside line, and in a way, if the index by any chance somehow manages to reverse back to the upside here, yes, of course, we could start looking at some higher levels. However, as I've mentioned before, we would need to see a nice good push above the 22,625 zone, roughly around here, in order to aim for higher levels. Until then, we're just gonna stay put here for now, because even with the downside, we need to see a drop below the 22,125 level. I talked about this one previously, and basically a nice good drop below this could in a way lead to some lower levels. However, in terms of the lower levels, yes, we could maybe aim for the 21,400 zone, or maybe slightly above that 21,530 territory marked by the low of the 15th of June, and then we would take it from there, because around here near this 21,530 zone, the price could also test the 200-day EMA. And if all this area does provide a decent support and we see a nice hold up here, and then well, maybe we could see a bit of a rebound and a push higher, because what I'm just keeping in mind, again, this is not confirmed still, because there is a huge way until this could get confirmed, but basically keep your eyes on a possible, maybe this pattern here, this possible formation. And if, let's say, this index starts drifting below the 21,125 zone, yes, this would also place the price below the low of the 18th of June and also below the 21-day EMA. And as I said, we could see a bit of declines, but if this area here does provide decent support and we see a rebound, then we may see maybe something of a possible descending triangle here. But again, too early to talk about that. Something just to kind of keep in mind in the back of your heads if we see a nice rebound here from this, let's say, the 200-day EMA here. Now jumping into the European indices, now German DAX, as you can see, the index drifted heavily to the downside yesterday, and this is what I talked about when I was saying that in a way, as long as it stays between these two levels, between the 12,133 zone on the downside and the 12,484 level on the upside, we'll take a bit of a neutral stand. But if it starts dropping below the 12,133, then maybe we could consider a bit of a move lower here. But again, this move lower could still be seen as a temporary correction before another leg of buying. And because we do have this upside support line, and if this upside support line taken from the low the 19th of March will continue to provide well, we'll continue to hold the price from dropping lower, then yep, we could see something like this, a nice curve to the upside, and maybe another push towards these higher levels here. But again, for now, looking at the cash index and where it's currently balancing at, it's just trading around this 12,133 zone. So we'll continue monitoring that. We'll continue watching this area. But if this gets broken, if this, or should I say, doesn't get broken, but if this index drifts lower away from this 12,133 territory, then yes, we could consider a bit of a larger correction here towards this upside support line. Now then, jumping into FTSE 100, this one managed to break the upside support line. However, as I've mentioned previously, it was a little bit of a tentative one, because although we had these two touches right here, it got violated back in around the 15th of June. And in a way, first of all, let's probably get rid of it because it's no longer kind of valid. Now, the main thing that you could do here is, well, of course, for now, looking at this picture, yes, it could drift further south, given that it dropped below the 6,231 zone. I talked about this level yesterday, and now, in a way, there is a possibility for this one to drift towards the psychological 6,000 zone or the 5,961 territory, which, as you can see, acted as a very nice area of support previously. So again, similar story as with Nikkei. Basically, there could be a possibility for this one to maybe form somewhat of a descending triangle, but again, too early to talk about that. First, we will aim for slightly lower levels for now, but again, don't get me wrong, at this point in time, it doesn't mean that we are now getting bearish or something like that. No, because for us to maybe start getting a little bit more bearish, we would need to see a drop below the 5,961 zone, and then we could consider further declines, because until then it could drift lower, it could find support somewhere around here and then reverse back to the upside. It might not even form this this idea that I just mentioned, the possible descending triangle. It might not even form that. It might form a just a triangle basically, and if so, it still could have a chance of a nice push higher here. However, to get a little bit more comfortable with higher levels, as I've mentioned before yesterday, we need to see a nice good push above this 6,310 zone, and then we could consider higher levels. But again, with higher levels, we will only drag this one towards the highest point of June, the current highest point of June, near the 6,512 zone. Gold. Now gold here drifted lower yesterday. It closed the trading session in the red, but it still remains above the 1748 zone. So what I've mentioned before was that if gold kind of continues to balance above the 1748 territory, then yes, any kind of pullback could be considered as a temporary, any throwback could be considered as a temporary correction before another leg of buying. So keep your eyes on this 1748 zone. If you wish as well, you could draw this upside support line just for that extra kind of confirmation, because if this 1748 zone gets broken and we see a break of this upside support line as well, then well, lower levels could be met. We could see this one moving further south. However, again, like I said, for now, guys, we are a little bit leaning more towards the upside, because again, we are still above this short-term upside support line that I've just drawn, and mainly we are above this 1748 zone, because our next target is the 1795-96 territory, which is the highest point of 2012, and slightly above that we do have that psychological 1800 level as well. Now then, Brent oil. So yesterday I covered this one, and I was telling you guys to keep a close eye on this short-term upside support line taken from the low of the 22nd of April. So basically it got broken, but what I was also mentioning that even if it gets broken, still the more comfortable level after a break of which we could aim for lower levels would be somewhere from around here, from the 36.96 zone, and then yes, lower levels could be met, because this would confirm a forthcoming lower low and more sellers could be joining in. So even if we got a break here, it doesn't for now, yes, although it kind of increases the chances of this one drifting lower. However, as you can see, it's getting a hold up near the 21-day EMA and near the 100-day EMA here, so shown as the yellow and the green lines respectively. So we'll keep an eye on this area, because if this continues to provide support, we may see this one reversing back to the upside and pushing higher. Also, something that I've mentioned before, that well, actually first let's get rid of this upside line because it's no longer valid. Another thing that I've mentioned before was that keep your eyes on a possible range, and that's the reason why we have this level here, the 36.96 zone, after a break of which we could consider lower levels. So that's why we would prefer to wait for a drop below this area, because what we don't want to see here is this one kind of moving lower, then finding good support here and then rebounding and pushing back up here. So basically kind of this way confirming a range. But for now, basically keep your eyes on these two levels, the 36.96 zone on the downside and the 43.40 level on the upside. We need to see a nice daily close above this in order to aim for higher levels. Quick update on Ripple. I talked about Ripple yesterday in my Traders Tea Time, and basically with Ripple here, you can see that the crypto is kind of testing this area here, the 0.1825, 0.1813 zone. It did violate it today. However, the bulls managed to push the crypto back above it. But what I was mentioning yesterday, that again, keep your eyes on this possible descending triangle pattern here. And let me just quickly mark this area. So there we go. Not like this, but like this. So basically keep your eyes on the this area right here, because in a way it kind of is kind of providing decent support. So this area is roughly between the 0.1813 on the and the 0.1743 zones levels. So this kind of all this area is, like I said, for now something to kind of keep an eye on. And but for us to get, let's say, excited about lower levels, we would prefer to wait for a drop below the 0.1743 zone and then aim for lower levels, because this would confirm a forthcoming lower low. This would place the price below the low of 16th of April and also the low of the 10th of May. So more sellers could be joining in. Until then, we're not really talking about any downside. We're just going to remain neutral and watch this pattern. In terms of the upside, you probably understand we would need to see a nice good break of this downside line here first, and then we could consider the upside. However, as I've mentioned before, we would get a little bit more comfortable with higher levels if we would get a push above this barrier, above the 0.2152 area. A nice good pop above this could, well, not could, but would also place the crypto above the 200-day EMA, and maybe more buyers could see this as a good opportunity to step in. So something to keep in mind. Now then, jumping into NZD CAD very quickly. So just a quick update here as well, because again, I've looked at this one previously in one of my videos. Basically, the same game plan remains. We need to see a nice good strong move above the 0.88 zone, and ideally a daily candle staying and closing above this barrier, above the 0.88 zone, because as you can see, we keep getting these overshoots, but we're not really getting a nice daily close. So that's why we're going to wait for a push and a nice daily close above the 0.88 zone in order to aim for higher levels. In terms of the downside, same story. As you can see, this level here, the 0.8713 area, continues to provide support. So a nice good drop below this and a drop below the 21-day EMA could send the pair towards a bit of a larger correction, because don't forget that we're still above this upside support line taken from the low the 19th of March. A quick update on the US dollar against the Mexican peso, something that you probably don't look at very often, but I've looked at this one yesterday in my trader's tea time, because it's basically very, very nice and technical right now, because it's forming a nice ascending triangle, which of course, according to all the TA rules, tends to break to the upside. So as you can see right now, the pair is testing this 22.81 zone. Yesterday we had a nice test of this area as well. However, it failed to kind of break above it and stay above it. So as we can see, the bulls are having another attempt to do so, and if that gets broken, then yes, higher levels could be met. We could then aim for the 23.55 mark, and then we'll of course take it from there. And by the way, that mark is the low of the 11th of May. Quick update on USD CAD. Now here, it's a bit of a difficult one. So I looked at this one the beginning of this week and last week as well. Basically, the pair is kind of was initially last week forming somewhat of a possible bullish flag. Now here, to be honest, looking at this picture here, it drifted lower. It failed to move above below this 1.3488 zone, the one that I was talking about last week, and you can see that now the pair is reversing back up. So basically, what we're getting here ourselves is a kind of a bit of an extended bullish flag pattern here. So basically we have a nice pole right here, the candle of the 11th of June, and now the pair is kind of approaching this potential breakout point near the 1.3666 zone, the one that I've mentioned last week. And in a way, if we do get a nice push, a strong move above this, and we eventually see a daily close above that, then higher levels could be met. But again, as I've mentioned last week as well, even if it travels higher here, still for now the trend is to the downside. It's still trading below this downside line taken from the high of the 31st of March, and in a way, even if it pushes higher here, this could still be seen as a temporary correction before another leg of selling. So keep your eyes on that one. Euro NZD. Quick update here. I've talked about this one yesterday in my morning video and my traders tea time as well. So basically what we're doing here is we're keeping an eye on this key area of resistance near the 1.7590 level, which, as you can see, acted as a fantastic area of support previously here, which is, by the way, the lowest point of May, and also it acted as a good resistance level here in around mid-June, or even the first half of June. And right now we're kind of approaching that again, although the pair is right now declining a little bit. Still kind of it's very interesting and tricky at the same time, so that's why wait. If we do get a push above the 1.75 90 territory, then yes, higher levels could be met. And in terms of the downside, we will probably wait for a drop below the current lowest point of this week near the 1.7330, and then maybe aim for further declines. Initially, of course, aiming for the current lowest point of June near the 1.7190, and then if that gets broken, then yep, a forthcoming lower low could be confirmed. Euro GBP. Now here I talked about this one last week and in the beginning of this week as well. Basically, I was telling you guys to keep a close eye on the 0.9020 territory, which if provided decent support could still kind of help the pair to move higher. As you can see, this is exactly what's happening. This area continues to provide support, and the pair is rebounding and trying to desperately try. The bulls are. It seems that the bulls are really desperately trying to push this one higher. The pair continues to trade above this upside support line, medium-term upside support line, taken from the low of the 18th of February. So everything's kind of supporting the bullish case right now here. But as you can see, the pair seems to be kind of struggling to stay above this barrier right here, the high of last week near the 0.9073 mark. And although this week we already had an overshoot, a small overshoot, we had a new high created, but like I said, the pair is struggling to close a daily candle even above the above the high of last week. So that's why for now we'll be very careful here, guys, and yes, we'll wait for that nice good pop, just for that extra confirmation. Overall, we're still, like I said, we're a little bit more bullish than bearish, but if you wish, you can wait for that extra confirmation, a break above the 0.9073 territory, and then aim for higher levels, slightly higher levels, because our next target is near the 0.9150, and then we'll take it from there. And finally, Euro USD. Here the pair is a bit tricky, I would say, because it's now drifting lower. Yesterday it drifted lower, so in a way the same idea that I've mentioned in my traders tea time yesterday, still the same idea remains, because basically we need to see a nice good pop above the 1.1353 level in order to aim for slightly higher levels. Until then, we're not going to really do anything here. We're just going to observe the price action, and even with the downside, we would prefer to wait for a drop below the current lowest point of this week near the 1.1168 zone, and only then kind of aim for maybe slightly lower levels. But again, for now, like I said, until it's stuck here, we're not really doing anything. We're just observing the price action, waiting for. I do understand that maybe we're missing out here on a bit of a move here. However, to be honest, we'd rather be on the safe side. So okay, guys, I really hope you found it useful. So thank you very much for watching and listening. I hope, like I said, you have a wonderful trading day today. Stay safe, both health-wise and market-wise. And yep, keep your eyes on the data today. Like I said in the beginning of my video, we do have the initial jobless claims from the US, continuing jobless claims as well from the US, and yep, the US GDP number for Q1 coming out as well. So yeah. Have a wonderful trading day, guys. Stay safe, and I'll see you later at my traders tea time, 13:15 GMT. Thank you very much, and bye-bye.